Today we take a look at the Vanguard S&P 500 Exchange Traded Fund, or ETF for short. Now, full disclosure, at the moment I do not own any shares of the Vanguard ETF. I am, however, comparing a couple different S&P 500 ETFs, and I want to make one of these a major part of my portfolio to get some extra long-term stability. So I will probably add one of these to my portfolio by the end of February or March. So what is an ETF? An ETF is an exchange-traded fund, which is a type of mutual fund, and these are portfolios that contain various securities. Most mutual funds are managed by a big investment firm, and they require at least $50,000 to $100,000 minimum investment. Now, with an ETF, you can get access to that fund without having to come up with the minimum deposit, since you can simply buy the shares on a stock exchange. This provides you with the added benefit of lower costs when purchasing the ETF shares, and you can easily sell them without the restrictions that most mutual funds have. The purpose of the ETF is to follow a prescribed investment strategy, so the investor knows exactly what type of returns to expect. In the case of the Vanguard S&P 500 ETF, the purpose is to mimic the return of the S&P 500 throughout the year, so that you as an investor can get a return that is equal to the growth of the S&P. Why focus on the S&P 500? So now you might ask, why would anyone want to mimic the S&P 500 in particular? Well, the simple answer would be because Warren Buffett said so. He talks about it all the time and puts most of his personal assets in index funds. When we look at the S&P 500 for the past 10 years, the first thing that stands out is that the last year the index did 18.4%. So with millions of people out of work, businesses shut down or going bankrupt, and the global economy put on pause, the S&P 500 still managed to do 18.4%, which is an incredible result. And if the index can provide this in such a disaster of a year, imagine what it could do during booming economic times. Luckily, we don't even have to imagine. Just look at 2019 when the economy was still operating normally, allowing the S&P to achieve a 31.5% return. In fact, in the past 10 years, the S&P has only had one loss, which was in 2018, and it was sandwiched between a gain of 21.8 in 2017 and 31.5 in 2019. So nothing more than a pebble on the road. Before we continue with the benefits and drawbacks, please like and subscribe to the channel for more finance and banking information. If we go back further and look at the past 20 years, we get our first major market crash in 2008, when the banks did their little mortgage-backed security dance with rating agencies and destroyed the worldwide economy. So yes, you could be critical and say, look, it's dangerous to invest in the S&P 500. However, most people that traded in 2008 lost much more than 37%. Not only that, but just 1 year after the crash, the market bounced right back and achieved a 26.5% return. In the years between 2000 and 2002, we had a worldwide recession causing the global economy to suffer. However, if you compare these 3 years with the 5 years before, you see annual returns between 21 and 38%. So your $10,000 investment in January 1995 would be worth over $35,000 just 5 years after. And if you apply these losses of the recession to your new value, it would be reduced to about $21,900. So even after the recession, your investment is still worth more than twice the original amount. These two extreme cases show just how robust the S&P 500 truly is. Now, with this in mind, we can look at the benefits of investing in the Vanguard ETF. Fund characteristics. The Vanguard S&P 500 ETF consists of 505 different stocks and has a median market cap of $161.6 billion. It is configured to have most of its exposure to the information technology market, making up 27.6% of the fund. The other two major markets in the fund are healthcare and consumer discretionary. Now, some of the biggest holdings in the fund include Apple, Amazon, Tesla, and Berkshire Hathaway. Over the past 5 years, the fund has had an average return of 14.79%. The benefits of the Vanguard ETF. So as we just discussed, the S&P 500 is a very robust index, and even at the worst economic times, it will either keep performing well or it will quickly recover from heavy losses. The Vanguard ETF has performed very well in the past 5 years, and in 2020 it did about 18%, while in 2019 it managed to do a 31%. So following the S&P 500 has proven to be very profitable, and despite this ETF being quite new, its performance seems to perfectly follow the S&P. If we put the S&P 500 and the fund side by side, we see that the biggest difference is only a 0.48 percentage point. The second benefit from this type of investment is that investing in the Vanguard S&P 500 is carefree. You just buy and forget, and by the end of the year you have a return on your investment of 10 to 20% under normal circumstances. From this it follows that the index funds are a very safe form of investment, which allows you to invest a larger part of your portfolio. Another benefit of investing in an ETF is the liquidity and availability. Compared to other investments, you can easily buy or sell your shares if you want to get in or out to capitalize on some gains. Other safe investments might require you to commit to a fixed period of 1 to 3 years and apply fees for early withdrawal. The drawbacks of the ETF. The biggest drawback of investing in an ETF is that it's not actively managed, meaning that when there is a major downturn in the market, it will simply follow this downturn. We saw this happen in 2018 when the S&P had a loss of 4.38% and the fund simply followed this loss, losing 4.76%. Since the fund is not actively managed, it would require you to make your own adjustments to limit your exposure when this happens. Now I will dive deeper into this hedging against economic downturn in another video, but for now just know that the ETF will not protect you from that. Another drawback of the Vanguard S&P 500 ETF is that it's still a new fund. It was created in 2016, so we only have 5 data points to determine the overall performance. This was the evaluation of the Vanguard S&P 500 ETF. Please like and subscribe to the channel for more finance and banking information.